Hey guys, Nick here from Nick's Taxes. Thanks for joining me on the channel. Be sure to like and subscribe. It really helps my channel grow. But today we are going to be looking at two US stocks that I think are in a really good position to grow in the next couple of years. We're going to take an in-depth look at these stocks and tell you all about why I'm really excited about these stocks. Now I want you to know that these are growth stocks. In my last video we talked about dividend stocks. These are growth stocks, so they have they don't have dividends, and they have a really high or a really good opportunity to grow and make some good capital gains. So that's a little bit different from a dividend stock. These stocks don't pay dividends, and we'll see that they actually reinvest a lot of their profits back into the business to grow. But this would be more of a risky stock in my portfolio, something where I wouldn't invest a whole lot of money relative to my portfolio size in these stocks, because right now I'm just making my best educated guess on these stocks to where I think they're going to end up, 2, 3, 5 years from now. So I wouldn't ship all my money into these, but I think that these are great stocks to look at. Again, I'm not a financial advisor. I'm just telling you the stocks that I'm looking at, and you can do your own due diligence and make your own decisions for yourself whether or not these are stocks worth looking into. With that being said, let's dive right into the first stock, and that is Upwork. Upwork sells on NASDAQ for around $15 a share currently. What Upwork does is it's capitalizing on the gig economy and the freelance economy. So what you do is you go on that site and you'll see a lot of different people offering their services for a fee. So you'll be able to see all the different things that they're offering, the prices, and the ratings and reviews that they've gotten for those services. So I really think this is going to be big for smaller businesses that are looking to kind of find an independent contractor to take care of some of the work that they're not really specialized in, or some of the work that takes a lot of time but they only do maybe once or twice a year. This is where Upwork comes in. So you'll see a lot of web development, you'll see some marketing, you'll see some kind of specialized things in that area on Upwork. I think that this is a website that's going to grow bigger and bigger as I believe our economy shifts in that direction. We got a lot of work from home due to the current pandemic that we have going on, and so there's going to be a lot of people kind of doing their own thing, and this is the website to do it. Upwork is currently the biggest player in this kind of field of gig economy. They currently have about a $1.7 billion market cap, so they're still relatively small, but I really like their financials. And so let's take a look right now at their income statement. A couple things that I really like here is their impressive revenue growth. And we're seeing their gross profits expanding by quite a bit over these last few years. But one thing that we see here that they're running into a bit of trouble is their general admin. Right now they're trying to win this market, and so they're funneling all their money back into the business to reinvest everything that they possibly can to grow and to make this opportunity as big as they can. So that's why you're seeing those losses there. They're really after expansion in the long run, and that's kind of why they're a growth stock right now. And now moving towards the balance sheet, what I also really like is the amount of cash that they have on hand. It is fantastic. What that does is it gives Upwork a lot of protection through all the up and downs that may come, because there's a lot of uncertainty right now, as we may know, and having that cash gives them that protection and gets them in a primed opportunity for when a certain business opportunity presents itself, they're able to take advantage. The other thing I like on their balance sheet is their long-term debt is only around 8.8 million, and given the amount of cash that they have on hand, they could pay that off today without even really batting an eye about it and really noticing that the money's gone. So they're in a great position between the cash and the long-term debt ratio, which is a sign of a really strong company. Now, their main competitor, which some of you may have heard of, is called Fiverr. Fiverr's big in the whole kind of e-commerce area. It's another gig economy sort of website. But I like Upwork better than Fiverr, especially in the value category. Fiverr is up in like the $80 per share realm, where this is a lot cheaper. And Fiverr only has about a third of the revenue of Upwork this year, plus Fiverr has bigger losses. So for the price, I feel like you're getting a much better deal out of Upwork than you are Fiverr. Now, the current Upwork revenue growth from analysts is around 12% for the year, and then will accelerate up to 14%. And I would not be surprised if that grew even more, especially the way that the economy is going this year. So I'm expecting a whole lot of growth in the revenue department for Upwork in the next 1 to 5 years. So check out Upwork as a stock to watch in the upcoming future. The next stock I want to look at is called RealReal. It's trading around $14 a share, again on the NASDAQ. And this company is kind of a cool company in my mind. It's a reseller for high quality luxury goods that you wouldn't find at like your Target or Walmart. This is a place where you can buy and sell those products. So you're buying a used luxury good, or if you have these products and you want to get rid of them, this is the place to do it. Buying and selling on RealReal is like a certificate of authenticity. You know you're not going to be buying counterfeit products. Someone is able to authenticate those products when they're being sold. So as a buyer, you know that you're getting a true product. So as I said, this is an online website designed for people who want to buy and sell luxury goods. And I think this is a great website, great company, as it's really better on everything. I think it's just better for everyone involved. It's better for the environment as you're reusing the products. It's better on your wallet as a buyer because you're not paying full price for these products. And it's better for the seller because you know you're in a safe marketplace to buy and to sell your luxury goods. And then ultimately it's better for RealReal, who's making a profit off of this marketplace. So looking at their income statement, revenue growth has been really solid. Gross profits have been way up, which is awesome to see. This is a company that's definitely been growing and growing at a good rate in these last few years, and I see that happening more and more. Now, the business has really expanded their operating expenses, and with this huge growth, they're trying to capitalize on the opportunity in front of them. So therefore, they are taking on some really, really big losses right now, but they're doing that in, again, the opportunity to capitalize on the market and to become the household name in buying and selling luxury goods. So they're taking on some big losses, but they're really trying to capitalize on this current opportunity that they have. And I think while they've been taking on those big losses, I think now is the time where that's going to start reversing, where their revenues are going to continue to increase, but their losses are going to also decrease at the same time. I think the worst is behind them, and you'll notice to their balance sheet, they have lots of cash on hand given their size. And one thing that's huge about this company right now is they don't have any long-term debt. So they have all cash, no long-term debt. That is a great position to be in if you are RealReal. So that's a great balance sheet situation. And the stock price since its IPO a few years ago has been falling, but I think just like the losses, we're going to start to see that reversing as investors and whatnot are going to start to see some actual profits come out of this company. So a year ago, EPS is improving. So the top line growth should continue to grow while their earnings per share will also improve. Now we're looking at their a small cap company. Again, it's around $1 billion in market cap. And so I think this company is going to continue to grow, but I also see this as a prime buyout stock opportunity for some tech giant. And I'm thinking like a Facebook. This would be perfect for a Facebook to come in and buy this company while they're still taking on some heavy losses, to swoop in, buy this company and integrate it with their Facebook marketplace. I can see that being a pretty easy and pretty good fit. Another company like an Amazon, I could see also coming in and buying it. Those two companies are huge with a ton of cash on hand. They could buy this without even blinking an eye. So I see this as a prime buyout stock opportunity for these big companies. So there you go. There you have it. Those are my two US growth stock picks. Let me know what you think in the comments below, and if you got value out of this video, be sure to hit the thumbs up and consider subscribing. I make personal finance, investing, and tax videos on a regular basis. So if you subscribe, if you like it, this really helps me and my channel out a lot. And that's all for me. Again, I'm Nick from Nick's Taxes. Have a great day. See you later.